This week's podcast is sponsored by Doc's Deals. You can find this week's deals at sdbullion.com/deals. This week, the Doc is featuring 2016 1-ounce gold American Eagle coins at only $49.99 over spot on any quantity purchased. 1-ounce silver shield rounds at only $2.69 over spot any quantities. These are some of our most beautiful and highly collectible silver rounds. And finally, 10% off all G2 RIP ammo. These radically invasive projectile rounds are the last round you'll ever need. Learn more at sdbullion.com/deals. This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today, once again, is our good friend out in the high hills of Denver, fund manager Dave Kranzler. It's great to have you back, Dave.
Thanks for having me. It's great to be back. Love doing this show with you guys. And was that high hills? Was that sort of a snarky remark about legalized weed here?
That was an unintended pun. So. I was picturing the beautiful mountains out west there.
We know what you're doing over the weekend, Dave.
Correction has continued this week in gold and silver. It's it's in about its 10th week now, guys. And as we were just chatting before the show, it's another Friday, another gold and silver smash. And I've noticed over these last couple of months here that the trend has shifted. It used to be, really for the last 3 to 4 years, that almost invariably the lows for the week in gold and silver would be early in the morning on Thursday, and then they'd extend and rally into the close on Friday. There's a lot of speculation that was to keep prices off the lows for the weekend for the bullion buyers. But regardless of the reason, the trend seems to have changed over the last couple of months here, guys. That seems like invariably on Friday morning, gold and silver see a big smash. Again, we're recording this on Friday afternoon. We're 3 business days away from the big September FOMC meeting. Really, the market is fully expecting the Fed to hike rates next week in September. I've said for a while that I don't think there's any chance of that happening, but I mean the Fed has been taking an enormous amount of energy to try to convince the markets otherwise. So as we were chatting before the show, guys, I think gold and silver are sitting pretty right now in the fact that if I'm right and the Fed does not hike rates next week, I think they're going to gap to the upside as the market is going to find themselves totally in the wrong position. But even if by some chance the Fed decides to hike rates only 60 days ahead of the elections, I think most of the pain for gold and silver has been priced in already, and we might get a little bit further of a knee-jerk reaction to the downside. Gold might retest its 200-day moving average, but I think after that you're going to see a resumption of a strong bull market, and really that's what played out last December when gold and silver were down hard leading up to the Fed hiking rates in mid-December, and once it finally happened, what was it, about a 4 to 5, 6-month bull rally was triggered and began. What's your takes, Dave?
Yeah, I agree with you. I think that the expectation of a rate hike is priced into gold. However, I'm not necessarily convinced that it was the unfettered free market trading that priced that expectation in. I as you pointed out, the pattern has kind of shifted from a Thursday smack on the price of gold to a Friday. And I mean, kind of historically, Friday's always been a day that if they wanted to manipulate gold, they waited till the COMEX closed and no one was around, and they would just dump a lot of paper into what used to be called the access trading system, which is the electronic trading system. It's called Globex now. But I don't think it's coincidental that a lot of the big hits that we see, or that we have been seeing during this correction, have been started to occur as soon as the COMEX opens. And yesterday is a perfect example where in the space of 30 minutes, 70 tons of paper gold was dumped on the market. I mean, it's almost like they're trying to create a shock and awe effect with these hits. And so I do, I think you could say, well, it's pricing in a rate hike. But I also think that it's the price has been taken down in manipulated fashion. And I also agree with you, even if they do hike rates next week, which I don't think they will, you're probably going to see a resumption of the rally in the price of gold.
Yesterday's hit as well came and completely changed the trend, because we were actually in an uptrend going through the open of COMEX. We actually got through the open of COMEX, and or the initial part of it, and then boom, when 8:30 comes, they attacked it, and we're still reeling from that attack. So this is definitely tape painting, and anyone who denies the manipulation is simply just whistling past the graveyard here. This is pretty clear that that's what's going on, and it is in the context of the FOMC meeting next week. I agree with both of you guys, and as we talked about before on the show, before we hit the record button, and it is a very high probability we might see some downside volatility leading up to the announcement, because they always tend to try to get metals immediately lower before an announcement. But within the balance of this month, with India coming more on stream to supply their jewelry and festival season, and China coming back in the market next week as well, because they're on vacation at this stage, on holiday. I think all of these things are going to coalesce to bring us much higher prices. And the most important thing that our listeners need to understand is that we actually already bottomed, at least from the perspective of looking at where we were 2 weeks ago in prices and all of that consolidation that we have seen. And despite all of the efforts that we have seen the cartel engender into trying to manage these prices, attack the markets aggressively yesterday and other examples, the same pattern that we've seen all year long of metals being resilient to these attacks and holding their ground remains. I mean, even after today's attack and yesterday's attack, we're still above the 1850 area in silver and holding reasonably well in gold as well too. So this is a very healthy bull market trying to deal with being attacked by the price managers of our dear powers that be.
In long term, it's been extremely healthy. Just for this 2 to 3 month period of consolidation and correction, working off some of the near-term overboughtness that gold and silver experienced in that huge rally we saw in the first half.
Yeah, miners as well too. We're holding reasonably well this morning. They finally did give up the ghost and got pushed down a lot. Maybe there's some margin selling in there too. But even when we look at indicators like what's going on with silver not being pushed below 1850, or miners still holding their ground, relatively speaking, even though they've had a really significant correction in the grand scheme of things, considering how much they've moved in 2016, this is still traditional bull market patterns fighting off the attacks that are coming into the sector. And frankly, even though it feels like today is just depressing looking at prices and whatnot, this market is a lot stronger than what would be visible to an average person just looking at it, who has not spent a lot of time focusing on precious metals. So that's really the goal that the powers that be are trying to do, is to keep people away from an awareness that this is a safe haven market worthy of people's attention.
Yeah, that's right. And I'd like to, if you brought up a good point. I mean, the market did have a big run in the first 8 months of the year, and from a technical standpoint, for what those are worth, it did become extremely overbought. And if you look at the Huey index, for instance, from bottom to top, it ran up like 184% in 8 months.
Yeah.
I mean, even if you only caught half of that move, any money manager would love to have a 90% move over 3 years, let alone 8 months.
Yeah.
And some of these junior mining stocks were up 500 to 1,000%. And it's true that the juniors became historically oversold, so a huge snapback was warranted. But I think you started to see a lot of froth pile into it, and with gold and silver, you saw a lot of macro momentum, algo-driven hedge funds pile into gold and silver futures to capture the momentum. And now that element is unloading their positions, and I think they probably have largely unloaded their positions, because the open interest levels in gold and silver are way down from their highs. And so, this, if anything, even manipulated or not, this pullback in the market is actually healthy because it eliminates the froth and just the pure momentum driven speculators, and it leaves guys like us who are fundamental long term holders. If you still have cash to put to work, you can buy at good levels here because we are going to go a lot higher at some point.
And as much as we'd all love to see gold and silver gapping up daily, day after day after day, I mean, the correction we've seen the last couple of months, it's been almost as much a time event as a price event. I mean, silver's really only, $2 off the highs. Gold's only, $60-70 off the highs. In number of percentage terms, it really hasn't been that bad of a correction at all, versus if we hadn't had that and gold skyrockets towards 2,000 or silver even runs to 30, at that point, then you have a much more severe price event. Say silver dropping back to 25 or 22 in a matter of a couple of days is what the market would probably see if you didn't have a healthy correction like this, where time plays as much of a component as price does. And again, that's all about building the base so the market has enough kinetic energy to continue a sustained bull run as we head into 2017.
Yeah, I agree with that. And I had originally said I thought that gold, my quote-unquote chart reader and go by the technicals, we could consolidate sideways for a few more weeks. But again, I think we all agree that after the most important FOMC meeting ever gets over with on Wednesday, we're probably going to start heading higher again in general. I think dips will be bought and traders will sell bounces, and we'll just start a new uptrend. It might just happen a little more slower than people would like it to happen, given how quickly it's moved over the last 8 months.
And the other thing, too, the cacophony of voices from the establishment, Larry Summers, Rogoff over at Harvard with his new book about the war on cash and his desire to do away with everything, even up to maybe just leaving $10 bills in people's wallets or what have you. I mean, the volume of concern that's being expressed by the Greenspans and on, the litany of people from the establishment that have been sounding the alarm and concern about what's going on in our financial markets and the degree to which they are obviously, on balance, confused and uncertain as to what are the next steps. I mean, these are the kind of prima facie facts that we can look at and get a gauge as to where the authorities that are managing our monetary system globally are thinking, and they're in a world of hurt. They're confused. They're kind of grappling for straws, trying to figure out what to do. And then you layer on top of this all of the confusion with the election coming, and the duration of this. We basically stopped having an economic recovery around 2012, and everything else has been running on fumes, and the degree to which so much of our financial and economic activity is an illusion has never been greater. And I can't see how they're going to manage to keep all these plates spinning in the air in 2017. I really think we're setting up for a really big financial disturbance in 2017, if not a full-on crash.
Yeah, well, we're semi-dipping into politics here. Let's go a little bit further. It's something we don't usually discuss or talk about on the show at all. Usually we stay away from it for the most part. But with all the events we saw in the last week, on Sunday we needed Howard Cosell to narrate the action on Sunday. Down goes Fraser. That's what it looked like.
I'm waiting for Hillary to be on stage in the first debate and, just fainting from the stress given her health problems.
I want to hear you guys' takes on, we're only 2 weeks from the debates. It's going to be interesting to see what she looks like on the debates, but if she can't
get a good double for her.
Right. If she can't get her health turned around pronto, it's beginning to look like the Democrats are going to have to replace her on the ticket. And everybody's been talking about Biden or, even Chelsea Clinton. But yeah, Michelle's what scares me. All the conspiracy theorists have been saying Obama's going to get a third term and suspend elections forever. And I mean, I haven't bought into that too much, but that's a way that...
If they replace anybody, if they pull a replacement, it'll be Biden. It's not going to be Michelle. Michelle is despised by a rather large percentage of the American people, and she would never, ever be able to win.
I don't know. I don't think she's despised by any more of
be able to execute.
I don't think she's despised by any more of the population that already despise her husband, Barack, and he got reelected.
She's got a lot of dirty laundry that would air out if she ran. There's no way she would run.
Yeah, she has nothing to run on either. I mean, Obama has this fake record, whereas Michelle is famous for recommending what people should eat and drinking more water. I mean, that's...
Well, let's hope you guys are right for sure.
Policy.
Let's hope you guys are right. What are your guys' thoughts on the chances of someone like Biden being inserted in the last minute? Is there enough time? Is there enough name recognition in anybody else replacing Hillary at the last minute?
It would be kind of hard to do it very close to the last minute just because of the nature of published ballots and things along those lines, the logistics of the election. So I don't know how that would turn out. But, you know, after the first debate, if Hillary passes out on stage, there'd be enough time.
Yeah, I'm not saying so much as the logistics of it. I'm more from a political standpoint. Would there be enough time for the identity and the brand name recognition of whoever that replacement is to get into the public psyche enough to vote for them, or is it something that just anyone not Trump is anyone not named Trump would get a vote?
It would have to be someone very famous who would immediately be able to cashier their standing public perception as trustworthy and smart and able to be a good president. And I hate saying this, but someone like Warren Buffett, okay? And I hate saying that because I consider him to be a crony capitalist extraordinaire and kind of a scumbag, but that's beside the point.
Yeah, certainly would be interesting. Any other thoughts, Dave?
You know, I mean, I can't wait to see what happens if she does go down with illness. I mean, my feeling on Biden, I think he's probably almost as dirty as she is, and he gave kind of a lame excuse for not putting his hat in the ring this time around. I can't remember exactly what it was, but I don't know if he would run because I think all the dirty laundry would come out on him.
Yeah, and he's also not as good as Hillary in covering his steps. He's very famous for sticking his foot in his mouth and heaving on the target of investigative journalism and so forth. As little as that still exists, he still wouldn't manage to scarf on his shoe lever.
Maybe her running mate. I mean, I don't know a lot about him other than I know he's tied into the elite.
Yeah, he'd be obliterated by Trump because he's not well known enough.
Well, if nothing else, it's been the most bizarre election cycle that I can ever remember.
Yeah, ain't over yet.
I thought Kimmel summed it up the best because remember Hillary went on to Kimmel a few weeks ago and laughed off the allegations that she was ill as conspiracy.
I'm actually kind of concerned about...
After Fraser went down on Sunday, came out and he said, you know, it's hard to believe that these are conspiracy theories when they keep coming true.
I wanted to give the listeners a quick update on the physical market here in silver. Had a pretty strong week of sales. Silver side, Silver Eagles, about 650,000 coins sold this week. It's brought September sales just shy of 1 million coins, and year-to-date sales just shy of 30 million coins. So it's picked up quite a bit over last week, and really I think it's the best sales week in a month or two, if memory recalls correctly. Really not too much in the way of changes on the physical market on the wholesale side here in the U.S. 90% premiums really have remained stable over the past week, and that's about 40 cents off of their lows. Availability has been pretty steady for Silver Eagles, Silver Maples, their premiums. Again, as we mentioned last week, all of the generic product has pretty much disappeared from the market. All the secondary, all the secondary product of investors that sold back into the market on that run up to $20. The market's really worked all of that inventory off, so that's a good, healthy sign. But it really remains a perfect sweet spot, in my opinion, for investors that have great availability of product really across all investment-grade products for silver and gold, which means low premiums, quick shipping times across the industry. So it continues to be a good time. Haven't seen any signs of real shortages at any point here in the second half of 2016.
What about the premiums on, say, 90%?
Yeah, they've held steady pretty much this week. Again, they're up about maybe 40-50 cents from the lows earlier this summer, but really didn't see any continuation of 90% shortage or rising of the 90% premium over this past week. It's pretty much held steady. Some of the big big retailers had sales on it this week. We've been selling 90% as at $1.29 for about a month now, so it really hasn't changed at SD Bullion. So yeah, it remains a great time premium-wise across pretty much all products.
I like the last time I was on the show, Doc, I liked the way that you had kind of stated it. You're like, this is the time when you want to load up on this stuff when the premiums are low. And you said the usual pattern is that everyone stops buying when the premiums are low, and then they chase it when the premiums are really high. So I agree with you. I think it probably is a great time to add to your collection of silver and gold.
And one thing that some people do, again, we can't give any investment advice, but one thing that we see people do is, obviously a lot of people will swing in and out of the gold-silver ratio, meaning that back in 2011, when the gold-silver ratio tightened towards 30-1, they sold some of their silver and bought gold. And then when the ratio extended all the way to 80-1, they kind of moved back into silver, playing the ratio. Well, you can also do the same thing with premiums on products that have premiums come and go due to market fluctuations. For example, whether it's 90% silver or 90% silver halves are probably the most volatile that the premiums fluctuate. Just about this time a year ago, 90% was selling for $5 or $6 over spot. Right now, you can get it retail for between $1 and $2 over spot. So that's a big arbitrage opportunity if you're willing to take advantage of it. That you can remain in the metal, but say shift from 90% to say 100-ounce bars or generic rounds, and back and forth, and play the premiums that way to try to increase the number of ounces you own. And again, you're not really caring at all about the spot price in a move like that.
Speaking of the gold-silver ratio, I don't know if you guys saw this, but the CME is rolling out 2 new futures products. One futures product is going to be derived from the gold-silver ratio, and one's going to be derived from the dollar spread between gold and silver. Now, you tell me what economic rationale is there for that type of product?
Yeah, that's just pure speculation, pure speculative plays.
I think it's another manipulative tool that they're putting in their quiver of manipulation tools.
It's that, and it's just another way for the banks to make cash.
The proliferation of derivative products, is just a nonstop flywheel, and we're going to constantly see all of that proliferation continuing until we have a crash. But it's definitely availing the powers that be to have more levers to pull and to jigger markets.
Exactly. It's a pure fiat manipulation product.
As my friend Jason Barak always jokes, welcome to dystopia.
All right, well, before we wrap the show, guys, I'd like to get your short to midterm take here, Dave. As we get going into the fall, I guess what's your outlook for gold and silver here over the next, say, 6 to 18 months?
6 to 18 months? Who thinks out that long? Certainly Wall Street doesn't.
Okay, what's your outlook between 3 p.m. and 4:30?
Act of intervention, I think that 6 to 18 months will be a lot higher in gold and silver than we are right now. I had been mentioned before we started recording the show that originally, 6 or 8 weeks ago, I was thinking that gold might see 1,500 by the end of October, and silver had a shot at 25. But I don't know. I think we still have that shot. But this correction, we may go sideways digesting this correction for a while, but it'll create a nice platform for launching a lot higher. And so 6 months from now would be, like the end of February? I think we'll be a lot higher at the end of February than we are right now. In 18 months, I mean, who knows? I hope we still have systemic continuity in 18 months.
I agree with Dave. I think that next week is a little hard to predict in terms of leading into the FOMC meeting. I mean, all of those things are typically pressured, and we see a lot of volatility going into it. But once on the other side of a non-interest rate hike, which is what's 90% probability, if not higher, is what we're looking at in the real world, as opposed to what market participants are telegraphing with their bets in the futures markets, etc. And we have been in this ongoing consolidation. We've held in, for example, speaking strictly of silver, 1850, and I think that we're going to take out $20 finally after this FOMC meeting within about 30 some odd days, and that we will begin to reassert the uptrend, and we're going to constantly be battling with the powers that be trying to manage this upward trend, but we still live in a world of $14 trillion of negative interest rate sovereign bonds, and the systemic problems in the world are getting worse. They're not improving. Everything in terms of global economics is pointing downward, and then we have all of the weird numbers that come out of the United States that periodically are spun to try to paint a picture of an economy that's actually doing okay when it's not. There's no way that our dear leaders can juggle all these crazy plates that they're spinning in the air indefinitely. That's why gold and silver have not broken down all year long, despite the enormous attacks that have been levied on the sector. And I think after this coming FOMC meeting next week, we're going to finally start moving higher again. But we'll see. But we already, even as of today, and the pain that we're seeing this week, it sure doesn't feel like we, earlier, 2 weeks ago, were at lower prices, and that we are actually at a point where if one just simply, I think of the comics traders and the paper traders and how they would look at technical analysis to inform their buying or selling decisions, what few humans remain versus the algos that are operating in the market. They would look at today's trading week in the context of a non-interest rate hike next week and see all of this as base building, and they would see it as a signal to go long again. And I think that's what's going to happen. And this time next week when we're recording the show, Doc, I think we're going to be higher. And that we're going to take out $20 within, some odd 45 days from now. Easy.
All right. It'll certainly be an eventful week. Regardless, gold and silver and the rest of the market's really going to move starting at 2 p.m. next Wednesday. Second half of the week will, if nothing else, it'll be volatile for sure. So I think we're all in agreement. We'll see what the Fed does. It never ceases to amaze me that we spend so much time here trying to guess what the Federal Reserve is going to do in their next policy decision versus anything resembling true economics. So
economics? What's that?
Yeah. Dave, it's great to have you back on the show. Thanks for joining us again.
Thanks for having me on again. I love being on this show.
All right. For the Doc, Eric Dubin and Dave Cransler hiding out in his minivan to avoid his cleaning lady. Thanks for tuning into this week's SD.
Hey, I don't have a minivan.
Thanks for tuning into this week's SD Weekly Metals and Markets.